Let's just take a look at, first of all, how much the whole notion of what's been going on the currency markets affected your earnings figures. And if we'd normalize them to last year's rupee rate, what would we have got?
See, on a constant currency basis, we grew the business in this quarter by about 4%. Certainly, dollar strengthening has helped the overall revenue profile, no doubt about it. But at the same time, the other currencies, whether it is British pounds or euro or majority of the other currencies, weakened against the dollar and strengthened against, weakened against the rupee as well. And in that context, it was a kind of a even play that we had.
Ganapathy, we're seeing a slowdown in Europe. The macroeconomic conditions, the macroeconomic storm clouds are gathering. How are you at the moment preparing for that? And how are you now looking at growth? And what are your forecasts looking like for the UK, the rest of Europe, and indeed the US, your primary markets?
Overall, I think, we are, while we are taking a cautious approach to the macroeconomic environment, our approach to business has always been being closer to the customers, listening to them, and then ensuring that we are agile towards adjusting our operating model and in terms of providing the right value proposition to our customers. What the pandemic has proved is that whether it is resilience or optimization or the growth that the customers are looking for, technology has become a staple for that. In that context, I think, we stayed invested over the last 3 years, built the suite of products and services that are applicable across all the three dimensions. So in that context, I think, we don't see any weaknesses in our demand when it came to the question of technology services. However, some of our clients in Europe especially, I think their focus is to see how the winter is going to be pan out. Are there going to be a major crisis of energy due to which, for example, supply chain may get affected? So, for example, manufacturing shutdowns can take place. Some of those things, means that we have to stay agile and then see what adjustments that are required for our business.
And if we see some of your clients' budgets shrinking, how are you going to counteract that? How are you going to continue growing Tata Consultancy Services?
Overall, we have a fairly diversified market presence and diversified product portfolio across verticals. So the intent is to see that, look, if certain sectors are affected, certain sectors will make it up for it. U.S. market is a large market for us. It's about 48% of our revenue comes from North America. So that's something is there. And across geographies, whether it is banking, financial services, or manufacturing, at this point in time, what we see is if certain things like, the energy crisis actually, pan out, manufacturing could get affected. But retail, looking good for us. We have built a pipeline, and the qualified pipeline is very broad-based across markets, across verticals. All those things should mean that, look, over the next 2-3 quarters, we have the order book. We clocked about $8.1 billion of order book this quarter. Over the last 3-4 quarters, it has been in the range of about $7 to $9 billion. So I think, we have the order book to execute. We have made the investments. We have made the hirings that are required for our business. So all that means that we'll have 2 to 3 quarters, we should be able to do well.
Well, let's talk about hiring, because attrition quite high, 21.5%. Is the talent shortage easing? And I guess what are you doing about these high attrition levels, which we believe are at some of the highest in 15 to 20 years?
Absolutely. I think, the demand for technology talent over the last 2-3 quarters had been at an all-time high. Anticipating some of this, we hired close to about 100,000 people last year. And in the first half of this financial year for us, we had about 35,000 people. They're all freshers, and we have believed in organically grooming them. So we have trained them, and now they're all becoming productive. Our utilization is at around 83% right now, so which means that we have a sufficient bench to execute some of this. From a attrition perspective, we see that the worst is over. It's probably peaked already. And then in absolute numbers, we see the attrition numbers are going to be coming down. And we already see that coming down for the next quarter. So from that perspective, I think, it will taper off, and the demand for technology talent as well as the attrition will probably stabilize to where we want it to be.
Another kind of labour force question, sort of twofold in terms of how you're dealing with visa issues in a number of countries, but also how you're trying to increase diversity in your business when you've got 36% of women on TSCC's workforce. That's only 36%, quite low.
Yeah. I think diversity and inclusivity is a very important thing for us, and we also realized that when you put a fairly diversified team across genders, across different cultures, across different age groups, then innovation comes in, and then better solutions emerge. So we are extremely focused on that. We are very proud of the fact that we are 36%. And we also, for example, in Saudi Arabia, we set up a development center, which is an all-women development center, which is actually doing extremely well for us, right? So there are things that we are trying it out, and that's why 36% is there. We are also conscious that at different levels of our workforce, they vary, the percentages vary. I think we believe that, we have some distance to go.
Ganapathy?
Yes, please.
Very, very quickly, Ganapathy, looking forward, which parts of the business are going to do better than the others? I mean, for instance, your financial services leg, is that going to continue to be your biggest cash cow?
I think we are the largest provider of financial services from a technology perspective. I think that will continue to do well. Retail, we are looking really good. In this quarter, it grew by about 25% year on year. The travel hospitality segment, I think, is nicely bouncing back, and all airlines are doing well, and they continue to make investments, and the hospitality segment is doing well. I think these three I would like to certainly call out as being, the pipeline also in these three sectors looks very good. So, lastly, I'll say that our product and platform business is also doing good.